You are 25. You have $3,200 saved. It took longer than you thought. You open your laptop at night. Same routine, same tabs. Property websites, mortgage calculator, a spreadsheet you've already checked 10 times. You already know most of these don't work. Too expensive, too risky, too far. You still scroll anyway, because one of them might. And then you see it. A small apartment. Nothing special. $180,000. You click it. You've already learned what to look for. Location first, then rent potential, then the numbers. Always the numbers. You open your spreadsheet. Purchase price, $180,000. Down payment, $9,000. You pause there. $9,000 is almost everything you have. You keep going anyway. Rent, $1,400 a month. Mortgage, $950. You sit still for a second. $450. It doesn't feel like income, it feels like a mistake. You check it again, then again. You change the interest rate. You increase expenses. You try to break it. It still works. That's when it gets uncomfortable. Because now it's real. You don't feel excited. You feel exposed. You think about everything that could go wrong. Vacancy, repairs, bad tenants, the bank saying no. You almost close the tab. Instead, you save the listing. You come back to it the next night. And the next. 3 days like this. Same numbers, same hesitation. Nothing changes, except your tolerance for staying where you are. On the 4th day, you make the call. Your voice sounds more confident than you feel. You schedule a viewing. You walk through the apartment like you already own it, checking corners, looking at walls. But really, you're running the numbers again in your head. $1,400, $950, $450. You don't negotiate much. You don't want to lose it. The offer goes in. Then the waiting starts. The bank asks questions, documents, more documents. You learn quickly. They don't care about your plan. They care about your risk. Weeks pass. Then the email comes. Approved. You read it twice. Nothing feels different. Until the first rent payment hits. $1,400. Then the mortgage leaves. $950. You watch both transactions. For the first time, you see it. Money coming in, without you being there. It's small, but it's not nothing. That's the first level. 2 years pass, not quickly. It doesn't feel like progress most of the time. It feels like repetition, work, save, wait. The first property doesn't change your life. It changes how you look at money. Every month, the rent comes in. $1,400. Every month, the mortgage leaves. $950. Sometimes there's a repair. $300. $600. Once, $1,200. You feel that one. You realize something early. That $450 isn't guaranteed. It never was. You start keeping a buffer. You stop thinking in best-case scenarios. You start thinking in margins. That's the first shift. You're not chasing upside anymore. You're protecting downside. You open your spreadsheet again. Same one. But now it's different. Because now you have data. Real numbers, not estimates. You adjust everything. Vacancy rate, maintenance, unexpected costs. The deal still works, just less comfortably. That's when you understand it. This isn't about perfect deals. It's about durable ones. You start looking again. This time, you move faster. You've done this before. You know the process. The fear is still there. But it's quieter now. The second property is harder to find, not because it doesn't exist, because your standards are higher. You skip more listings than you open. You walk away from deals that almost work. A year ago, you would have taken them. Now you don't. That's the second shift. Discipline replaces urgency. Eventually, one shows up. Not perfect, but solid. You run the numbers. Purchase price, $200,000. Down payment, $10,000. Rent, $1,500. Mortgage, $1,050. Cash flow, $450. Again, you notice that. Not the profit, the consistency. You close the deal. The process feels less dramatic this time. Still stressful, but familiar. Now there are two rent payments, two mortgages, two sets of problems. One tenant calls about a leak, the other pays late. You handle both. After work, at night, on weekends. No one sees this part. That's the third shift. Scale doesn't remove problems, it multiplies them. But it also multiplies something else, options. A few months later, you do it again. The third property. You don't overthink it this time, you trust your process. 3 properties now. You update your spreadsheet. Total rent, $4,200 a month. Total mortgages, $2,800. Cash flow, $1,400. You look at that number longer than you expected. $1,400. That's not extra anymore. That's meaningful. It doesn't replace your salary, but it changes how you feel about it. You notice something subtle. You're less dependent. Not free, but less exposed. You don't react the same way to work anymore. Bad day? It doesn't hit as hard, because your income doesn't come from one place anymore. That's the fourth shift. Income diversification isn't about earning more. It's about depending less. You still go to work. You still show up. But internally, something has changed. You've built something outside of it. Something small, but real. And for the first time, you start thinking differently, not about your next paycheck, about your next property. At 5 properties, things change again. Not on paper, in practice. Your spreadsheet looks better than ever. More income, more assets, more equity. But your calendar looks different, busier. There's always something. A message, a repair, a payment issue. It doesn't stop. You used to think scale would make things easier. It doesn't. It makes them heavier. That's the next shift. Responsibility compounds faster than income. You update your numbers. Rent, $7,000 a month. Mortgages, $4,500. Cash flow, $2,500. On paper, it looks simple. $2,500. In reality, it doesn't feel like that. Because it never arrives all at once. It comes in pieces. And sometimes, it doesn't come at all. One tenant leaves unexpectedly. Vacancy, 2 weeks. Then 4. You cover the mortgage anyway, out of your own pocket. You don't panic, but you notice it. That's when you understand something important. Cash flow isn't profit, it's buffer. And buffers get tested. A month later, a bigger problem. Water damage. Insurance covers part of it. Not all. You pay the difference. You don't hesitate. Because you already know the rule. Protect the asset first. Everything else comes after. That's the next shift. You stop thinking like an owner. You start thinking like an operator. The numbers still work. But now you understand why. Not because nothing goes wrong, because enough goes right. You start building systems. Simple ones at first. A list of contractors. A process for tenant screening. A buffer account. You don't call it a system, but that's what it is, because without it, this breaks. 5 properties is the point where most people stop. Not because it's not working, because it's not easy anymore. You feel that too. There are days you question it. When something breaks. When someone doesn't pay. When everything happens at once. You think about selling one. Just to simplify things. Just to breathe. You don't. Because you've seen the numbers. And more importantly, you've felt the shift. You go back to your spreadsheet. You zoom out. 5 properties. 5 income streams. 5 assets increasing in value. Slowly. Quietly. Independently of your time. That's when it clicks. This isn't about ease, it's about trajectory. Where this leads, not how it feels today. You stop asking if this is comfortable. You start asking if this is scalable. That's the next rule. Comfort doesn't build portfolios. Consistency does. You look at your numbers again. $7,000 in rent. $4,500 in debt. $2,500 in spread. You've seen this pattern before, it's just bigger now. And for the first time, you start to think seriously about the next level. Not one more property, something else, something larger. Because you understand something now. You don't need to do this forever. You just need to do it long enough for the system to take over. 8 properties, then 9, then 10. You stop counting the same way. Not because the number doesn't matter, because the pattern does. You've seen it enough times now. Buy, stabilize, repeat. The process is no longer new, but the scale is. You can't manage everything the same way anymore. There are too many moving parts, too many messages, too many decisions. You try to keep control. For a while you do. Then something slips. A delayed repair, a missed message. Nothing catastrophic, but enough to notice. That's when you make the decision. You hire a property manager? 10%. You stare at that number longer than you expected. 10% of your income. Gone. Every month. You try to justify not doing it. You run the numbers again. You calculate what you'd lose, then you calculate your time. Evenings, weekends, constant interruptions. You already know the answer. You just don't like it. You hire them anyway. That's the next shift. You stop optimizing for maximum profit. You start optimizing for sustainability. The first month feels strange. Fewer calls, fewer problems, more distance. You don't know every detail anymore, and that bothers you. At first. Then something else happens. Nothing. No emergencies, no late-night calls, just silence. The system runs. Without you. That's when you realize what you actually built. Not properties. A structure. You open your numbers again. Rent, $14,000 a month. Expenses, mortgages, management, $9,000. Cash flow, $5,000. You compare it to your job, your salary, after tax. It's close. Closer than you expected. You don't react immediately. You just watch it. Month after month. $5,000. Again. $5,000. Again. Then 1 month. It's higher. A small increase. A rent adjustment. Nothing dramatic, but enough. You run the comparison again. Your job income and your property income. They cross. Quietly. No announcement. No moment. Just a number on a screen. You sit there for a while. Not excited. Not emotional. Just aware. Something fundamental has changed. You don't need your job anymore. That thought doesn't feel real at first. You test it. You imagine leaving. No salary, no safety net, just the portfolio. It feels risky, even now. That's the next shift. Security doesn't come from certainty. It comes from control. You don't quit immediately. Most people don't. You wait. 6 months, then 12. You watch the numbers. You stress test everything. Vacancy scenarios, market drops, unexpected costs. You try to break your own system, it bends, but it doesn't break. That's when you know. This isn't luck anymore, it's structure. 2 years later, you send the email. Short, professional, no explanation. You close your laptop, no celebration, no dramatic moment, just quiet. The next morning feels the same, until you realize something. You don't have to go anywhere, you don't have to answer anyone. Your time is yours. 15 properties, then 20. You don't remember every purchase anymore. Not the same way. They stop feeling like events. They feel like entries. Numbers on a balance sheet, income streams, debt positions, equity lines. That's the next shift. It stops being personal. It becomes structural. You don't think in listings anymore. You think in opportunities. A small block. 6 units. 1 seller. You look at it differently. Not as one property. As a system inside a system. 6 rents. 1 decision. You run the numbers. Purchase. $900,000. Rent. $8,400 a month. Expenses and debt. $6,200. Cash flow. $2,200. You don't hesitate the same way anymore. Not because there's no risk, because you understand it. That's the next shift. Risk doesn't disappear. It becomes measurable. Banks treat you differently now. Calls get returned. Deals get discussed. You're not convincing them anymore. You're negotiating. That's when you notice something subtle. The best deals never show up online. They come through conversations. A broker you've worked with, a seller who wants certainty. Speed matters more than price. Execution matters more than negotiation. That's the next rule. Good deals are found. Great deals are structured. 30 properties, some single units, some multi-unit. Your monthly cash flow, $15,000, sometimes more. You don't track individual rents anymore. You track performance, occupancy rates, net yield, debt ratios. The spreadsheet you started with doesn't look the same anymore. But it's still there. That's the part people don't see. The systems, the processes, the constant adjustments, because the machine doesn't run itself. It runs because you built it to. That's the difference. You open your numbers one more time, not to check income, to check position, assets, debt, cash flow, all moving together. That's when you understand it fully. You didn't get here because of one deal or one decision. You got here because you repeated something simple, long enough for it to compound. That's the final shift. You stop thinking about money as income. You think about it as control. Control of assets, control of debt, control of time. And once you see it that way, you can't unsee it. Somewhere right now, a 25-year-old is sitting at a laptop, scrolling listings, same filters, same price range, looking at a $180,000 apartment, running the same numbers. $1,400 rent, $950 mortgage, $450 difference. He thinks it's small. He thinks it's not enough. He thinks it's about the money. It's not. It's about what the money turns into. The offer goes in, the deal closes, the tenant moves in, and the system starts, quietly, just like it did for you, and just like it will, for the next person who decides to begin.